Hi there traders and investors, today is Tuesday, June 13. I'm glad to share a regular market review prepared for InstaForex. Today we should be ready for highly anticipated news, a consumer price index for the US. Traders are on the alert to grab the opportunity to play on the news. Let's discuss some trading ideas on how to earn on the CPI report. The first instrument to discuss is gold. It's still trapped inside the triangle pattern. The price is trying to escape from the pattern through the upper border. Logically, after decline, the metal is making a correction and then will go up. I support a bullish trading idea, however, I'm confused about the double bottom. For those who prefer perfect scenarios, the price left a sloping target level. Yesterday, traders were buying gold during a downward move. Currently, the price is climbing ahead of the news. Perhaps gold will tumble following the CPI report. There is no chance to buy gold at low prices now. If you bought gold at swing lows, as I told you last week, you should have been already at a break-even. If you want to buy now, you will face big risks. If you went long last week, your take profit will be at $19.84 a troy ounce. Today we will get to know the CPI and tomorrow the Fed's interest rate decision. The trend triggered to buy the CPI today may not extend tomorrow. Today gold could follow one direction and tomorrow the opposite direction after Powell's speech. That's why it would be better to make a decent profit than to plan risk bets. Those who are still away from the market should pay attention to extreme lows. If the CPI is high, we will see the US dollars advance and gold will tumble. So we could enter with long positions betting on a rapid rally. Another option is that the price will go up and slump during Powell's speech. Hence, we could hunt for that low target. This idea is for those who's just planning to enter the market. On the daily chart, the price formed a curious pin bar after engulfing yesterday. There's enough room for growth. We expect a further three-wave structure. To sum up, there's plenty of stop losses at lows. I wouldn't be surprised if market makers will push the price down. The euro-dollar pair is conquering its highs. It's good for those who are now increasing long positions. It looks like an illogical move before the news. I don't see proper targets in terms of my stop hunting strategy. Big targets are located up and down at equal distances from the current levels at 1.0485 and 1.11. I don't know how to catch the right price move. We need some confirmation. I'm not trading the euro before this CPI report and the Fed's announcement. Perhaps I will enter the market after the Fed's meeting. Let's see. The pound sterling is making sharp swings. Yesterday on the 4-hour chart, the instrument rose to the swing high of May 10. I also don't have any new trading ideas. The bullish trend is still going on. Today we will learn the news on the US dollar, which also sets the tone for the pound-dollar pair. The currency pair is set to trade under high volatility soon. The USD CAD pair has come to a standstill before an imminent slump. I hope it will happen either today or tomorrow. There's a smooth ascending channel. The price has bumped into it lots of times. The instrument is now at the lowest levels of the year. I anticipate its nosedive soon. It could happen straight away or from a retracement. Anyway, I clearly see a huge cluster of stop losses downward. Market makers will come to grab the money anytime soon. I suggest we could sell the pair with tight stop losses if trading signals are confirmed. It's expensive to sell the instrument now. I take profit should be placed at the lows of November 2022. I see selling pressure at the US dollar's weakness. Eventually, it should tumble sooner or later. The instrument is commonly hard to trade. We should forget the levels of 1.36 or 1.37 because all buying impulses are engulfed by short positions. So I predict a clear cut steadily downward until 1.26 where the instrument felt comfortable in 2021-2022. The dollar-yen pair is not revealing any signs of going short. The instrument is also locked inside a tight triangle like gold. I believe the price will break the lower border. The currency pair is overbought. There is a zone of buyers' stop losses which have been amassed for the 2 weeks. I detected a mirror level where there are also plenty of stop orders. If you want to buy the pair now, you will set a stop losses either 1,000 or 2,000 down. I reckon that the market makers will smash these zones. Indeed, market makers are aware of all macroeconomic data before their release and set traps for retail traders. That's all I wanted to tell you today. Good luck.